Hey guys, this is probably gonna be a short stream. It's been pretty calm recently in the markets, but I did manage to find one good short vol trade, so let's jump straight into it. So today in my daily option scan, I found XRT, which is the S&P retail ETF. So it does have a little bit of GME in it, which explains maybe why the vol has been a little high recently, but it's only about like 1.5% of the ETF. So overall, I think this ETF shouldn't really trade too much like a meme stock. We can quickly look at the holdings of the ETF just by Googling it. I think like one of the top holdings is like Amazon or something like that. You can see it's like Carvana, Amazon. There is some GameStop, but everything else kind of looks like super generic retail companies, as a retail ETF should have. We're gonna see here the implied vol is 26, but the realized vol is like around 20, and we also see that the implied volatility is just overall like much higher than what realized is over like the last year or so. So I'm thinking here this shows up on the scan. It's got GME in it, so it's got a lot of attention. We're seeing like a big premium compared to like historical performance. So maybe this is an opportunity for us to sell vol here. So what we're going to do is we're going to compare the implied volatility to our forecast of what future volatility is, and then maybe place a trade if we like it. So first thing we can do is look at some historical data. We can see implied volatility is falling, realized volatility is falling as well, but right now realized volatility is at 20%. Generally speaking, like past volatility kind of indicates future volatility because volatility clusters, right? So unless there's something particularly interesting happening in the next 30 days, it's reasonable to assume that realized volatility is going to be roughly around the 20 mark. So we can just note that down in the notepad here because I'm terrible with remembering numbers. We can also see a PA forecast here in the terminal of 2144. This is we get this number because the terminal averages a bunch of IVs and RVs. It's a blend, right? So we can use that as an indicator as well. We'll note this down here that the PA forecast is 2144. Let's also look at just what the premium looks like over time. We can go to the relative value tab. Ignore IWM for now. We'll get to that in a bit. But we can plot the ratio of IV and RV over time. You can see one is like right in the middle here. And that tells us, as the key metrics also says, like the average premium, the mean is like pretty close to 1. It's 1.07. But in recent times, it's actually jumped up to 132. We're seeing a large IV-RV spread right now. But, this isn't always the case. What we kind of want to see is like, given the, let's say like IV-RV is at the average ratio right now, what should realized volatility then be, right? So we can predict like if XRT IV is around 26, then the realized vol should be maybe like, divide this by 1.07 to get like the average. Maybe that's not properly explained, but like, so realized vol should be maybe like 7% less than implied vol on average, right? So we can kind of like use a calculator to figure that out. Yeah, that's a much better way of explaining it. Right now our vol is 2633, but if the IV-RV was at the average of 1.07, realized vol would be, I'm guessing it's going to be like 25 or something like that. Let me just plug this into the calculator. 26.3 divided by 1.07. Yeah, we get like 24.6. So when implied vol is 26 on average, because of this ratio, we know that realized vol is on average 24.6. So we can just kind of note that down as a estimate as well. So yeah, just looking at historical data, it's kind of looking like realized vol should be around like 20, 24-ish, a little below implied, just by the historical data. But we can go a step further and kind of plot IV-RV ratios against maybe like a correlated stock. So IWM is a small cap ETF, and since XRT has like a lot of small caps as well, except for Amazon and some stuff, like I figured that it'd be pretty correlated. We can do a quick check here. Look at IWM versus XRT. We're seeing the returns do look pretty correlated. Maybe a little less in recent times, but still like 0.8. So 80% correlation is pretty good. You can see the price charts; they're both roughly similar. There's like a little bit of a, a spread here, but then eventually kind of just falls back in line. So yeah, it makes sense for the IV/RV ratios of these two stocks to be similar because they're so correlated. Things that affect one should, in theory, affect the other as well. Back to the relative value tab, we can plot out the second ratio. You can see XRT and IWM, they have very similar IV/RV ratios for the most part. Maybe there's like a little break here, and there's definitely a bit of a break here as well, today. Anyway, so XRT's spread is like 132, but IWM has a 1.13 ratio. That tells us that XRT is expensive relative to IWM. So if these stocks should be quite similar, then what should the realized volatility be so that these ratios are the same, right? Right now, implied vol is much higher than realized vol. If we try to adjust the realized vol so that the spreads are the same, like we can kind of figure that out through math, I guess. Let's see here. So let's assume XRT's IV/RV should be 1.13. That means, just plugging it into a calculator here, what's implied volatility at? I forgot to write that down, so I'm gonna have to go look it up. Implied vol is 2633. Yeah, so if implied vol is 2633, what would realized vol have to be so that the IV/RV ratio of XRT is also 1.13? So we can just plug that into the calculator here, 26.33, and then you divide that by 1.13, and you get a realized vol of 23%, roughly. So we have our estimates here, and we can kind of just average them to get a general idea of what we think realized vol should be. So calculator's already open. We can take the PA forecast of 2144. You add the realized vol of 20%. Maybe add the RV of 24.6. That's if the IV/RV of XRT is at its average. So 24.6. And then we add our RV if XRT's IV/RV ratio was the same as IWM's, and that's 23.3. And then we divide by the 4 estimates that we have for a vol of 2233, or 2234 if you round up. So just a quick recap. We're looking at XRT here, and we see the implied vol is 26, realized vol is falling to 20. Based on some historical data, we're estimating that, the PA forecast is estimating a 21 vol. Realized vol is at 20, so that those two kind of agree. We also looked at just the average option premium, and we estimated that realized vol would have to be 24.6 if the premium was at its average. And then we looked at IWM spread, which is 1.13, and we calculated the realized vol at which XRT's ratio would be the same as IWM's. Using these 4 metrics, we've got an average forecast of 2234. So now that we have our forecast, we can plug that into the calculator to see what our edge looks like. Just hopping into Vol Insights here to get the price. Are we at 60? Nice. Okay. If the price is 60, then I'm guessing we're going to sell the 60 straddle or something like that. We're looking at the June monthlies, and our implied vol is 2633. Sorry, just checking a message here. I'm not sure if somebody sent anything. Just a moment. This is very unprofessional, but that's alright. It's my first week. Okay, nothing. Let's see. Pricing the straddle. The current price should be around $3.95. We can check that in Thinkorswim. We're looking at XRT again. XRT, we go to trades. We're selling the we're selling the 60 straddle. We're selling one of them because we don't want to explode. And then we analyze the trade. No, we don't need to analyze the trade. The mid price is 4.1. No, the mid price is 417. And then the worst price is 413. And then, let's see. It's close. It's off by a little bit, but that's probably just because the models are different and whatnot. Your broker would use a different model than the PA one. So as long as it's close enough, it's a sanity check to make sure we're not actually like got something like $6 or something like that. All right, so let's say the straddle's like 395 at the current implied vol of like 26. Let's plug in our forecast and see how the price changes. I'm gonna write this down because I actually can't remember any sort of numbers. So straddle right now is 395. And if we plug in 2234, the straddle is actually 336. So that's the market price. And then this is the forecasted price. Open our calculator because I don't want to do mental math. 395 minus 336. So the option is, the straddle itself is overpriced by around $60. And yeah, once again, I don't have actually any info on how much margin this takes because I would have to open my live trading account. I don't really want to do that, but it's $60. Let me see if Thinkorswim lets me know. Let's see, the buying power effect is, so I think we have portfolio margin, so we can just kind of multiply this by like 3 as like kind of like a guesstimate. So maybe like $4,000 in like Reg T margin, I'm guessing. Yeah, I'm gonna minimize this and then get back to it. $60 divided by, let's say 4,000. Yeah, that's like 1.5% over like about a month. That's not too bad. So yeah, now that we're satisfied with this trade, we can stress test it. So we go back to the Analyze tab, we open this trade. What's the biggest move XRT's actually made in like a single day? Let's take a look. It's kind of looking like 68 to like 74-ish. What's this? 74 down to like around 67-ish. So just doing some quick math here. 74 divided by 68-ish. So the biggest move is like 8%. Let's stress to like, I don't know, 15 or something like that. And then biggest vol jump is probably here from 29 to like 36. That's kind of lame, so we'll just stress it to like 10. We want to be super safe when this kind of stuff, when we're trading this kind of stuff anyway. If we move vols up by 15 and maybe the spot price by 15 as well, what we end up with is, yeah, and this is like the straddle tomorrow after the move, I think. There's one line, where's the other line? So we're looking at 51 or 69, 51's here, 69 is here, there we go. So if XRT blows out completely, vols go up by 10%, and maybe the spot price moves 15% as well. This isn't gonna happen in real life, obviously, but if it does do this, you're out $600. Yeah, that's not bad. So if your risk tolerance is $600 or more, definitely put on XRT, and yeah, that's like 1.5% return on margin in about a month. So yeah, that's our daily vol trade of the day. Looking at earnings and forward vol, we did a scan earlier this morning. There's basically nothing tradable for earnings, and there's also nothing really tradable for forward vol either. So EWZ does show up, but if you open your brokerage, then the vols aren't actually all that weird. It's just a low volume ticker with like slightly weird data. So it's still a slow day today, but you know, we found one trade and that's decent, I guess. I'm gonna end the Twitch part of the stream because our community might want to discuss some trades. So if you guys in Twitch want to see what we do afterwards, you guys should sign up for Predicting Alpha. It's 30 days free, and then I think we're having some sort of promotion. Just go on the website and check it out, I guess. Links are in the description, I'm sure. All right. See you, Twitch.